Hello and welcome to Fintech Focus TV. I'm Toby and delighted to be joined today by Alastair from Ascendant Strategy. Alastair, how are you?
Good. Good to see you.
Excellent. Listen, congratulations.
Thank you very much.
You guys have just made the Ultimate Fintech list again for the second year in a row.
Yeah.
You guys have been doing some great stuff over the last few years, but for those who haven't heard or seen of you before, tell us a little bit more about yourself and the business.
Yeah, sure. Okay, so Ascendant Strategy is a capital markets post-trade consultancy. We focus on strategy, execution, and fintech enablement. We'll talk a little bit more about that later. We work with typically banks, tier 2, tier 3 organisations. Our strategy piece is really around helping people decide how they're going to transform. Obviously, in this environment, a lot of that is around how to save cost. But we have been lucky enough to work with a couple of people who are investing in new business. So that's been quite exciting and refreshing. Our execution piece is really just program delivery, providing senior leadership and structure around perhaps the change that we've helped them define, but maybe their own roadmap. And then fintech enablement is really helping startup technology organisations develop a dialogue with the post-trade environment departments. Typically, it's not an area that a lot of people understand anyway, even in the industry. But if you're coming from outside it and you're developing some technology, actually finding a vocabulary to discuss how your application or toolkit might be of use in the post-trade world is quite hard. So we have spent quite a lot of time working with not real, two blokes in a garage kind of thing, but people who have a small established client base, but typically maybe in the front office. But the application itself or toolkit may have massive use in the post-trade world. So just bringing that knowledge of how they might be able to be of use to them, work with them to actually develop a pitch to the post-trade world and take that forward. So there's a few of these types of organisations that we've been working with and with some success. So that I think for us, that is very exciting because it's a way of bringing new stuff to the stodgy old post-trade world who will typically talk to the massive vendors, and just replace their big systems from time to time. Want to do something innovative with new companies, but don't really know how to access it. So it's a two-way dialogue difficulty that we help to resolve.
And I think it's very interesting when you look at that that post-trade world. You mentioned the word stodgy there. It has been traditionally like that, but over the last year or two, we've seen an awful lot of desire to shake things up a little bit in there. If I look at some of the common themes of the companies who are on the list, it's businesses who are in the right areas and looking at the right sort of problems and solving the right sort of problems. You guys are very much in that category. What else do you think would have shone out to our judges when they were looking at you guys again?
So I think one of the things that makes us interesting to the stodgy back office world rather than the fintech companies is the fact that we do bring this kind of outside in perspective. We bring them fresh ideas, we bring them different ways of looking at the problems that they're facing, but we come not from a consulting background, we come from a practitioner background. So it's not ivory tower, McKinsey strategy stuff. It's real options for solutions to their problems that are things that we in our former roles would have gone, that's interesting, hadn't thought of that, or never had time to think about talking to those guys about that. But you're bringing these fresh things to people who want to hear fresh things and want to do stuff.
Solving real problems.
Exactly, and this perspective that there's no innovation going on in post-trade and capital markets is not driven by a lack of desire from the participants themselves. They want to do this stuff. They're just absolutely slammed on cost. They're all so busy just trying to deal with whatever's going on. If you think about the current environment, everybody's splitting their teams up between their BCP sites and so on. So the operational difficulties of running a business with a really thin crew just doesn't give you any bandwidth to think about being creative and innovative and spend time trawling through lots of potential vendors to find the one that's actually going to help you with your specific problem, let alone even understands what you're talking about.
And you're allowed to do that to sort of smash in case of emergency, so to speak.
Exactly, yes.
Come in there and deal with that. So what do you see as some of the challenges in the marketplace at the moment?
Well, I think our view is that after more than a decade of kind of skimming cost cuts, people have done all the obvious things around cost savings. So everybody's largely offshored, outsourcing to a certain extent. People have really looked at delayering their management structures. There's been some kind of application consolidation going on where it's feasible. But basically all those kind of simple levers that give you a 5 or a 10% cost cut are kind of gone. The cost pressure is still there. Revenues, although the last couple of quarters have been a little bit better, but on an ongoing basis, the cost model does not support the sustainable revenue. So there's still a lot of pressure to take a lot of cost out of the post-trade world. So our view is that we're kind of at a tipping point now, because you've exhausted all the easy options. Not that they were that easy necessarily, but compared to what you need to do next, they were easy. And people have now got to look very hard at what their infrastructure, combination of people and technology, is doing. What business model does that support? Because chances are, particularly the technology, is still the same technology you had 10 years ago that supported a much bigger business footprint. And although you've got loads of people out in the back office, because it's also cross-product, you're still sitting on all that technology. So our view is that you've got to look at actually doing something about that now. You've skimmed costs for a decade. You've now got to do something radical. This is where it starts to get interesting, because in some people's minds, radical is replace gloss with Torstone, or whatever, just replace a chunk of application with a similar but newer thing. Some people are definitely seeing the benefits of the cloud, but I think for what we're preaching is that you're not really going to get that step function cost saving unless you address your entire process, and maybe not in massive detail, but don't microanalyze your current cost base. You've got to look at it big picture, but understanding your current and future business model, not your historical one. So look at the process from an end-to-end perspective, and then design your architecture to automate as much of that as possible. We'll come back to how fintechs can fit into that. But don't just replace big applications. Look at doing a proper end-to-end, where have I got people doing things where I could automate? But look at that in the context of a proper process. We had a great example of someone desperate to put some RPA into a process, and they'd seen an inefficient process of, I think it was basically someone got a spreadsheet from person A, took this out, reformatted it, and put it into a different spreadsheet, which went on to person B. You could do some RPA around that, obviously. Actually, if you look at the bigger process, there was a mainframe report that came out here that went into somebody's, effectively a database on their laptop, on the desktop. That then went into a spreadsheet extract, which went over here. That was this spreadsheet. Obviously, this went into another spreadsheet. This went over here, and this went into another spreadsheet. So it's all this just the data going on. And actually, in the end, this person, all they actually wanted was the same bit of data that was on this report that came out of the mainframe in the morning. So, in isolation, if you look at this really small thing, that could make a sensible, if small, cost improvement. But actually, if you look at this thing, you can take out a load of this rubbish and just actually stick with your stodgy old mainframe system that gives you a report at 8 o'clock in the morning. But just an example of the sort of kind of madness that can go on if you look at the micro level. So our view is that people really need to look at, as they go forward, really looking at an application architecture that allows them to be flexible. And it's kind of just your old SOA, service-oriented architecture, not microservices, but the bigger chunks thereof. Particularly recognizing that you need to be able to adopt and drop things. You want to be in the cloud for all the benefits that brings. So have an architecture that flexibly allows you to take this on here for this bit of your process, maybe push this to a managed service somewhere else, because really mutualization is the way that you're going to get savings in the longer run. But make sure that your application architecture supports that flexibility. We talked to one tier 2 UK bank course of the last year. They were thinking about trying to do something around their cash management funding processes. They were looking at that as talking to big 5 vendors and look at their offerings and try and pick one. Our view was actually this set of functions is all about the data and availability on a timely basis of enough data to make the decisions around what you're going to do from a cash management perspective. So actually you should be investing your money in opening up your architecture so they sit on a classic legacy architecture where the internal data flows are very hard to access and are going to make the integration with whatever product you end up being very difficult, because there's all the touch points that it needs to extract and insert data into. So don't actually do that. Buy one of the sort of Uber spreadsheet things, but make the data available. Now, lots of people are doing this with sticking APIs here and here. That, to us, I think is more like sticky plaster to kind of keep your legacy going a bit longer. But if you are going to go into this transformational thing, then what you create needs to be plug and playable. It's like your phone, where you can say, I don't like that thing anymore, I'm going to use this payments app or this, so just in and out. But the platform allows you to integrate these things quickly. So that's the key thing. Recognize that it's going to be a very dynamic playing field in the coming years, and create your architecture to leverage that.
Yeah. So it's fascinating advice that is founded on simplicity, effectively.
Absolutely, yeah.
And that's the message that you take out to people watching, and to where you can add value.
And it's not about bleeding edge technology. We're not saying stick blockchain in here to do that. We would view that your architecture should be able to leverage somebody else's offering with new technology. So you're not taking that huge technology risk. You've got an architecture that's ready to pounce when something comes along that looks interesting. But you haven't taken the big risk around investment in that stuff. Would be our view.
Simple things done well.
Yes.
So what's next for you guys?
Well, we're continuing to build the business. We're about to take on a business development role as James and I become more and more busy with delivery. We have less and less time to do the ongoing feeding of the sausage machine. So we're looking to hire someone permanent to do that, which we're very excited about. We continue to work with new clients. We really enjoy that, because every time you work with a new client, you get another view on who's doing what with what. And we see the same old problems in every organisation, and within the course of 2 or 3 conversations, you're able to tick 6 out of 10 of the common problems already evidenced. But seeing how they're looking to solutionize against these challenges, what tools they're using. What's actually particularly interesting is, what have they tried that didn't work? And why not? So you're building up this view of how the industry's doing, what the industry's experimenting with, and what has and has not succeeded in those experiments.
Are you seeing a big shift in terms of what people are asking you to look at in 2020 than they did in 18, 19?
I'd say really it's the same mix. It's all about transformation. The shift is really people starting to think about, actually, I need to do something much bigger now. I would say, and very commonly observed narrative on the web, that people are increasingly ready to adopt cloud-based solutions. And I think people are starting to recognize that it's not just about saving money on your infrastructure by sharing somebody's tin. You're actually setting yourself up for more of this adopt and drop type model. If you can architect something that exists in the cloud, you're some way down that track already. I think also mutualization, as we talked about. So effectively, your level 1 cloud strategy is infrastructure mutualization. If you're running applications in the cloud and you're running vendor applications in the cloud, then that's the sort of next layer of saving, that your mutualization has extended into the application software space. And once you're there, for a big platform, maybe a settlement platform, if you are joining that community, the chances are there's much more harmony across the processes, the human processes that sit around that software. So it enables the next step of, if you like, the third level of mutualization around people. Because if they're all doing the same processes, then it's much easier to mutualize that. The historic model has just been transfer some people and take your set of processes with you. So you've got lots of vendors who've taken on people, but they're all doing the same set of different processes for each client, ultimately achieving the same goals, but no mutualization around that application layer and the people there as a result. So I think people are starting to understand that cloud's not just about data centers, it's deeper than that, and the real benefits will come from that being an enabler for further mutualization of what they do. Some people get it, some people don't, but once you've got that, it's much easier, I think, to become, if not an evangelist, but an enthusiast for a cloud strategy. Once you realize it's not just the data center stuff, it's much bigger than that. If you're going to get
so cloud's been growing for a number of years now, and it took a long time for the door to be knocked down in FS. And I would say it's probably been very present for probably 5 or 10 now. Why are you seeing this sort of increased trust in?
Well, the big ones cost. The big ones cost. That people are now seeing that to do this, this challenge around cost in post trade is something that means you're prepared to take risks that you previously weren't. Those risks are reduced as well. I think it's just through it becoming more commonplace,
Yeah.
people will just perceive it to be less risky. I think also you're starting to see some generational change in senior leadership. I think we're not all the way there yet, but you know, where
it's
you've got
more prevalent at board level, isn't it?
Exactly. I think where you start to see C-level change to the next generation down, particularly in a CIO role, obviously your COO as well, where you start to get the next generation there who are grown up with the internet, grown up with iPhones, etc. Just that risk perception reduces, I think.
Yeah, no, it's fantastic, fascinating stuff to talk about. Listen, I'm so thrilled for you guys to continue to thrive. I love hearing the story of James last year. It seems like you've gone on from strength to strength again this time out. Who should be talking to you?
Anybody who's got pressure around needing to change what they do. That may be pressure coming from cost. It may be pressure to do business differently, new business. People who think they've got an idea about something but don't know how to translate that into a roadmap for execution. People who are reading about fintechs but just don't know what might be relevant to them. What's the market landscape that I should be aware of? So people who are needing, for whatever reason, to do something to change the way they work, or are curious about what might be some solutions to a roadmap maybe that they've defined conceptually but not actually translated into a sort of you know, a proper plan around we're going to do this with this and that with that, and you know, translate into an execution strategy. So anybody in that kind of on the cusp of change and needing some advice, people who are in change and it's not going well. So one of the things that we've helped quite a few people with is basically project and program remediation. So people who have embarked on a change and just do not have the capability to do it, but didn't realise, you know, when they went into it. So again, we see this very frequently. Similar sets of problems around how people are not doing well with transformation, and sometimes it's really easy to solve. It's just a communication thing, or you know, just simple missing roles or whatever. But generally, we find that we can help people very quickly with remediating change that hasn't gone well. So yeah, if you're about to do some change but need to define it, if you need help with change, whether it's just to manage it because you haven't started and you've recognised you haven't got the capability or capacity, or if you're somewhere down the track and it's not going well. If you're a fintech and you think you've got something that might be of use in the post-trade world, happy to talk to you. I guess part of the problem is you don't know what you don't know, and so you don't even know that your offering might be useful in the post-trade world. But we're always that could be quite a brief conversation. Not waste too much of it either.
But at least it points in the right direction, doesn't
exactly.
it? And provide further solution. Well, look, I think you guys embody the fact of simplicity being one of the key drivers for success in the FS world at the moment, certainly in technology. You know, if I look at the common traits of everyone who's listening, that it's the team itself and the depth of knowledge that you guys have is extraordinary in a really defined space. And then, you know, the value being added through cost reduction and being able to guide people in the right areas for change and transformation, which is so prevalent, mean that it becomes a no-brainer. So well done again.
Thank you very much.
It's been lovely having you in here. Thanks for coming through. And thanks to all of you for watching. We'll see you again soon on another episode of FinTech Focus TV.